What is up, everyone? My name is Vlad the Crypto Trader, part of the Be Independent tribe, and today we're gonna go over another setup. We're gonna have some fun, in short. So, we're looking at the final setup here, which I found today. The final risk reward of this is 3.67, which I like very much because it's kind of in the mid range between 3 and 5. I find that any setup above 5 is usually a bit too optimistic on our side, and something below 3 is something that is not optimal for our capital in terms of capital allocation and trade selection. So as we did in the last video, we're gonna draw the setup, and the way to do it is that we just need to get rid of it all. So what do we see here? Initial squeeze. Let's draw it out. Let's also mark a level, which I tend to mark as well, which is the POC, point of control, again. So this is the level at which most of the majority of the volume occurred. And now that we have our squeeze, what we'll do is, again, use our method of free count. We're gonna count 3 alternating highs and lows to draw our setup. And in this case, I'll actually probably do something that you don't really expect me to do because in this case our third high will be this high right here. So the third high becomes our entry point, like so. And then it's really interesting that we really came close to this bottom over here. Let me mark the level I mean. I want you to see this level right there. So that becomes our stop. And then we also have a level which is marked exactly in the middle of that high and low, relative high and low. So that will be yellow right there. And then we also need to connect them, of course. Let's do just that. Yep. And from the bottom as well. And then, so again, what do we need for a trading idea? We need three things. We need an entry, a stop, and a take profit. What we've drawn right now is 2/3 of our trading idea. And again, the way we find our take profit is not by doing some voodoo shit, it's just by taking what the chart already provides us, what is already in the geometry of the pattern. You really don't need to make anything up or make it in any way, what's the word I'm looking for here? You need to make it as methodical as possible. And what I found in the beginning of my trading process is that one of the problems with classical technical analysis patterns is that you can identify them, but where that's charting. So you can chart a symmetrical triangle, for example, but how did you trade it? Where did you place your entry? Where's your stop loss? Where's your take profit? All of that is very subjective. What I really like about this method is that the trading idea is done by the price action. You don't need to make anything up yourself, essentially. So we have finally drawn it. So let's check out now the risk reward, which we briefly talked about in the beginning. Bam, 3.7. And the reason why I didn't take this relative high as our entry point, for example, is because this third point is already valid in my view. So that's why. And also, if we go back and we use our volume profile, we see that the point of control at this stage, so before the breakout had occurred, actually coincides with it's in between our entry and our stop, and this is something we want to see. So let's also mark it blue, but make it a thinner blue. And I think it moved. I saw it moving slightly. No, so yeah, it moves after the breakout, as you can see here. So it moves a bit above, but before the breakout had actually occurred, the POC actually matches with our entry channel. So that's really good to see. And I caught this setup today on today's scan. I saw a falling wedge here, which I had drawn in the beginning, something like that. And it's currently squeezing, so I think this is just a potential re-entry possibility where the breakout has already occurred. We've already revisited this area, but we need more consolidation before the actual impulsive move can come through. Also, there are time limits for this trade, and it's quite long, so it's around 46 days. So if we move that forward, this would be our time stop. So a time stop is when the trade hasn't so time stop is relevant when your trade hasn't stopped you out or you didn't exit on the take profit. Once we reach this vertical level, you just stop the trade manually. So there it is. So that leaves us with 30 days in trade, which is something a bit too long for myself. And also I checked the volume of this coin, and it's really low. On the USD pairing, which we're seeing, is about 6 BTC, and on the BTC pairing is around 20 BTC. So even cumulative, that's less than 30. I don't think you should be trading anything under 50 or even 100 with decent size. So have that in mind, especially when entering a market. Yeah, you're much safer just placing a limit buy or a stop limit buy. Don't buy at market because you can literally just buy up the entire order book. Volume looks decent. Also, price action looks decent. Volume profile looks decent. Fibs looks good. The only thing is trading volume. But that means that it's an easy-going coin or trade both ways. So risk reward is good. Nothing against that. So just wanted to share with you that one. And just before I go, the AM by DI I traded. I didn't trade, but I suggested it a couple of days back. It broke this low right here, which if you check out that video, you'll see this level right here. I'll draw it in black this time. So we broke down, but this low is still holding. So this will still be a valid setup as it is. And again, we see the 3.7 number. Coincidence? Maybe. But this is how that setup is looking currently. So still looking at AMP. Got fun today. And was not watching Kava, but it really already went, in my opinion. A bit too slow on that one. And if you are looking for a smaller risk reward setup, which I wouldn't personally take because it's below 3, as I said in the beginning of this video, you have QLC BTC as a potential trade idea as well. Well, that was it for today, guys. I hope you enjoyed. Please leave a like and share this video if I provide you any value, and see you the next time around. Take care.